Hi, everybody. Scott Riley at the Market Update Desk, powered by Mortgage One. Hope you had a fantastic weekend. We had beautiful sunshine all weekend. It's a great time to go buy a house. I had a lot of buyers calling me over the weekend. We got a lot more sun out there today as I'm looking through the window there, and it's just such a pleasant surprise. So we got a little bit going on today. The market is still digesting what the media is calling a huge jobs report from Friday and talking about how resilient the economy is and jobs are. Now, we went into pretty specific detail on Friday on why the jobs report was pretty much bogus. The population controls, the seasonal adjustments that happen every January for the last 6 years. Magically, those adjustments and counting of jobs hit right before political season with State of the Union. So what that did is really sent the bond market pressure downward. We moved up in rates, unfortunately. We're still starting to see pressure on bonds this morning. So stocks and bonds are both off to lower starts this week. And they're really specifically being pressured because comments of Chairman Powell that he did on a 60 Minutes interview that we'll talk about in a minute, and also from information from the Bank of Japan. Now, over the weekend, Chairman Powell did an interview with 60 Minutes. While he didn't say anything new at all, he reiterated that there will not be an early rate cut in March and hinted that any first move will have to wait till the middle of the year and is contingent upon the Fed having more confidence that inflation is heading substantially, quote, lower and towards the 2% target. Now, this doesn't make sense because you get into political season later in the year. Also, we are on the 6-month interest inflation rate of 1.85 and an 8-month of 2.08. So we do have it there. And the fact that they're asking for more confidence in it really makes me wonder, what data are they following? Because the data is there. Also, we heard from our favorite Fed governor, Governor Bowman from San Francisco, who cited that several risks to inflation moving higher, including geopolitical conditions, easing of financial conditions, and continued labor market tightness. Now, remember, she's probably the biggest hawk on the Fed panel. So she always comes out like this, and it makes no sense. Again, she's a lawyer that worked at mommy and daddy's bank for just a short period of time. So we really question the true economic knowledge and understanding of the forces that she has. Now, interestingly, she talked about this pressure from oil with everything going on in the Red Sea and with the Houthis. But WT crude oil is back down to $72 a barrel. And in fact, we're talking about the Fed being restrictive. It's still extremely restrictive and becomes more so as inflation comes down, which we're seeing, if they keep the Fed funds rate elevated. The job market, as we've talked about, is not anything close to what they're talking about in the media because no one's doing a deep dive into it or is talking about it. Now, also, we had another Fed member, although non-voting, Kashkari, also is a big hawk on rates and talked about the strength of the labor also, and talked about slowing or waiting for rate cuts. This is not helping the bond market whatsoever. The Bank of Japan has begun to signal that they are maybe confident enough to end the NIRP, the negative interest rate policy that's been in Japan, in the near term. And are moving. So this comes out within a Financial Times article that showed up today and signaled that the Bank of Japan may be ready to exit this negative interest rate environment. This also pushed bonds lower because the yields across the globe got higher. Now, this is going to be a fairly quiet week as we talk about data coming in. It's going to be much more based on commentary. Today, we have the ISM Services Index and also the Senior Loan Officer Opinion Survey. Wednesday, we have mortgage applications. 10-year auction, 10-year bond auction. It's going to be very closely watched. And then Thursday, jobless claims and the 30-year auction. So Wednesday and Thursday is going to tell the tape of where we're going to go for the week. Now, interestingly, we're talking about the labor market. Snap indicated they were laying off 10% of the workers. They announced that today. There's also Microsoft layoffs, Apple, and many others. So the fact that these Fed governors talk about the strength in the labor market is very confusing. The mortgage-backed securities today are down 43 basis points. We're taking it on the chin. 10-year bond is up to 4.16. We were all the way down to 3.81. So definitely not a great start to the week, but we'll keep you updated. Give us a call. We'll help you get pre-approved. Use our knowledge to help some offers get accepted. 616-293-2189. Hope everybody has a great afternoon.